What if I told you the world didn't learn a single lesson from the greatest financial disaster in history? What if the same warning signs that led to the Great Depression of 1929, unemployment, mass bankruptcies, and a market collapse, are flashing again today? Right now, in real time. We always assume that history is behind us, that we're smarter, that technology, regulations, and innovation have made us immune to another catastrophic meltdown. But the truth, history doesn't repeat, it rhymes. And the ghost of 1929 has returned. In this video, we're going to uncover how the entire global economy, yes, including your job, your money, and your future, is walking the same dangerous path that led the world into chaos nearly a century ago. This is not just a story about the past, it's a warning about the future. The 1920s were known as the Roaring Twenties, a decade filled with booming stock markets, rapid innovation, and the rise of new consumer culture. Radios, automobiles, and airplanes symbolized a future that seemed unstoppable. The stock market wasn't just rising. It was exploding. People believed that prosperity was guaranteed forever. But behind the glamour and celebration, a silent threat was growing, one that almost nobody wanted to acknowledge: speculation. Everyone, from millionaires to taxi drivers, was borrowing money to buy stocks, convinced they could only go up. Easy credit fueled a dangerous bubble, inflating prices far beyond their real value. The economy wasn't rising because of true growth. It was rising because of debt. And when wealth is built on debt, it takes just one shock to bring everything down. Sound familiar? Today, we are living in the largest debt-driven economy in human history. Credit cards, auto loans, student loans, corporate debt, government debt. The world owes more than $300 trillion, over 3 times the size of the global economy. We've repeated the same belief. The market will only rise. But just like in the 1920s, reality doesn't care what we believe. Back then, cracks were forming well before anyone noticed. Wages were stagnant. Wealth inequality was extreme. Banks were gambling with ordinary people's savings. Corporations were manipulating stock prices. And yet, business leaders and politicians insisted everything was fine. Those are the most dangerous words in finance. This time is different. Today, we are hearing them again. Stock markets at record highs. Tech giants dominating the global economy. Cryptocurrencies creating overnight millionaires. People convinced risk has disappeared. But underneath the glossy headlines and viral wealth, most households live paycheck to paycheck. Real wages aren't keeping up with inflation. Corporate layoffs are rising. Asset prices are dangerously inflated. Just like 1929, the system is fragile, and pressure keeps building. This ghost from the past isn't supernatural. It's a mindset: greed, leverage, and denial. And today, that mindset is back, stronger than ever, fueled by social media hype, meme stocks, and the belief that wealth can be created out of thin air. Everyone is chasing prosperity built on nothing. But here's the twist. The Great Depression didn't start with the crash. The crash was simply the moment the illusion shattered. And in our time, small cracks are already appearing. Bank failures, real estate collapses, rising defaults, governments printing more to survive. The question isn't, will there be a breaking point? The question is when. In the next part, we dive into exactly how the 1929 collapse unfolded, and the patterns repeating today that we can't afford to ignore. The cracks in the 1920s economy were spreading, but nobody was listening. Investors kept telling themselves the same comforting lie: it's just a small dip. Everything will bounce back. And then came Black Thursday, October 24th, 1929. The day the illusion died. It started as a whisper. A few traders selling off stocks after sensing the bubble was overinflated. Prices slipped a bit. Then more traders panicked. Within hours, fear spread faster than any headline could track. Phones rang non-stop. Brokers screamed orders. Millions of shares were dumped in a desperate rush to escape the fall. By the end of the day, billions of dollars in wealth had evaporated. And yet, the real panic had only begun. The following week, Black Monday and Black Tuesday, the worst stock market collapse in modern history. The market fell with no bottom in sight. Banks couldn't answer frantic withdrawal demands. Businesses halted investments overnight. Ordinary people watched their life savings vanish into thin air. Everything that looked strong and unstoppable just days earlier suddenly looked like a house made of paper. Because it was, but why did it fall so fast? Why did a crash turn into a Great Depression? The answer comes down to three things: debt, trust, and chain reactions. The domino effect banks in the 1920s were not the safe institutions we know today. They took deposits and gambled them in the stock market, hoping to cash in on the boom. When the crash hit, banks didn't just lose profits, they lost people's money. Customers rushed to withdraw cash, but the banks didn't have it. That rush, a bank run, turned fear into systemic collapse. One bank failed, then another, then dozens, then hundreds. Each collapse crushed more businesses and households, leading to more panic and more failures. Within 4 years, over 9,000 banks shut down across America. Imagine waking up and your bank gone. Your savings gone. Your job gone. That was everyday life in the 1930s. Factories shut down because nobody could afford to buy products. Workers were fired because companies had no money to pay them. Even healthy businesses starved in a financial drought. It wasn't just a market crash anymore. It was an economic extinction event. The human cost, struggle, despair, and the Dust Bowl. We measure crashes by numbers, but the Great Depression was a story of people. Millions lost their jobs. Families were evicted from their homes. Soup kitchens formed in every city. Children dropped out of school to survive. And as if economic devastation wasn't enough, nature delivered a second blow. The Dust Bowl. Overfarmed land plus drought created massive dust storms that wiped out agriculture in the American heartland. Entire regions became barren wastelands. Farmers fled west, searching for work that didn't exist. Hunger wasn't a risk. It was reality. That era gave us images etched into history. Fathers selling apples on street corners. Mothers writing desperate letters to the government. Kids wearing shoes made from cardboard. The world learned a painful lesson. When the financial system breaks, real lives break with it. Governments tried to fix it and failed. Here's the shocking part. When the economy plunged, government leaders did almost everything wrong. They believed the best response to a crisis was cutting government spending, cutting wages, cutting social support, raising taxes, raising interest rates. In other words, tightening the belt while people were already suffocating. These solutions only worsened the crisis. The result? A recession turned into a decade-long depression. Politicians didn't understand the disease, so their cure killed the patient faster. And here's where the parallel becomes terrifying. The modern mirror. Are we falling into the same trap? To understand how close we are to repeating history, let's look at a few undeniable patterns. Pattern number 1. Extreme debt. Everywhere. Just like the 1920s, markets are fueled by borrowed money. Governments borrowing to fund budgets. Corporations borrowing to buy back their own stocks. Households borrowing just to survive inflation. Debt makes everything look richer than reality. Until it pops. Pattern number 2. Wealth gap at breaking point. In the 1920s, the richest 1% controlled a massive share of national wealth. Today, even more extreme. When most people struggle while a few thrive, the foundation isn't stable, it's fragile. Pattern number 3. Asset bubbles everywhere. Housing markets overpriced. Stock market at historical highs. Crypto speculation. AI hype pushing valuations into fantasy territory. Everyone believes they can get rich fast. Again. Pattern number 4. Banks under stress. In 2023-2024 alone, major banks in the U.S. and Europe faced liquidity crises. Quietly handled, quickly forgotten, but stress doesn't disappear. It builds. Pattern number 5. Denial from the top. In the 1920s, leaders said, "Everything is fine." Today, central bankers, CEOs, and politicians repeat the same message, even while layoffs rise, even while inflation bites, even while debt balloons. History is whispering the truth. The danger comes when everyone thinks nothing can go wrong. A bubble bigger than 1929? Here's the scariest part. In 1929, only a tiny portion of the population was invested in the stock market. Today, the entire world is. Pensions, retirement funds, life savings, small investors, big corporations, everyone is tied to the same gamble. If the bubble bursts now, the shockwaves won't hit just one country. It will be global. What took years to collapse in the 1930s could happen in days with modern speed. The ghost isn't just back, it's more powerful than ever. Pause and reflect. We like to think we're smarter now, but the same psychology drives us. Greed, FOMO, denial. We want more, faster, easier. We want wealth without work and growth without cost. But that dream carries a price, and historically, the bill always comes due. In the next part, we go deeper into what happens after the breaking point, how society responds, how systems fail, and how, once again, the wrong decisions could turn a recession into another depression. We'll also examine specific modern triggers, ticking time bombs that could ignite a global collapse. The banking system's hidden weakness. The real estate markets that are already cracking. Nations drowning in debt. A generation priced out of the future. The myth of endless money printing. A geopolitical climate on the edge. Because sometimes history doesn't wait for us to catch up. Sometimes it repeats faster than we expect. The modern triggers and repeating mistakes. We've seen what happened in 1929. We've seen the warnings today. Now let's explore what could actually trigger another global collapse, and why the aftermath could be even worse this time. Because if history is a ghost, the future could become a haunting. The hidden fault lines beneath our economy. Every major collapse needs a spark. In 1929, it was a market panic that exposed the cracks already there. In 2008, it was subprime mortgages. Today, there isn't just one spark, there are many, all burning at the same time. Let's break down the biggest dangers lurking in our world economy right now. 1. The global banking weakness. When Silicon Valley Bank, Signature Bank, and Credit Suisse collapsed in 2023, governments rushed to assure us this isn't like 2008. But look deeper. Banks today are holding trillions in assets whose value depends on interest rates staying low. Guess what happened? Rates skyrocketed. That means banks are sitting on hidden losses, huge ones. And just like in the 1920s, depositors trust banks blindly until they don't. A modern bank run wouldn't happen over days. It would happen in minutes with a single tap on a smartphone. Domino effects move faster than ever. 2. The real estate crisis. Nobody wants to talk about office buildings in major cities sit empty. Remote work changed everything. Permanently. Commercial real estate loans are going bad. Developers are defaulting. Property values are falling. And guess who owns a massive share of those loans? Banks. In 2008, the bubble was homes. Today, it's skyscrapers. If the wrong institution falls, the shock won't be local. It will spread globally, just like it did in 1929. 3. Government debt, the unspoken catastrophe. In the Great Depression, government debt was high, but manageable. Today, governments are drowning. To keep people afloat during crises like COVID-19, trillions were injected into economies. That helped temporarily. But it came with permanent consequences. Debt keeps rising. Interest payments keep rising. Taxpayers can't keep up. When nations owe more than they can ever repay, trust evaporates. And once trust dies, currencies collapse. Entire countries destabilize. Just like in the 1930s, political chaos often follows economic chaos. 4. A generation without a future. Back then, young Americans entered adulthood with affordable homes, growing wages, expanding opportunities today. Millions of young people feel locked out. Housing prices out of reach. Education costs crushing them in debt. Jobs not matching the rising cost of living. Savings impossible with inflation. This creates a dangerous social powder keg, because when people have nothing to lose, they start demanding change, aggressively. The Great Depression didn't just reshape the economy, it reshaped society. We could see this again, but perhaps on a global scale. 5. Endless money printing, a dangerous cure. During the Great Depression, the government didn't spend enough early on. Today, governments spend too much, too fast. Every time the economy shakes, we get stimulus, bailouts, quantitative easing, liquidity injections. All fancy words for the same thing, printing more money. But when money is created faster than the real economy grows, prices rise, savings fall, confidence disappears. And the consequence is the same one that haunted Weimar Germany in the 1920s. Inflation. Inflation forces people to choose between food and rent. Inflation erases purchasing power. Inflation destroys belief in the system. Once trust is gone, the crash isn't just financial, it's psychological. History's scariest pattern. Confidence, collapse. People think the economy crashes when money disappears, but the real trigger is when belief disappears. In 1929, the moment investors realized the boom was fake, they ran. In 2008, once people believed banks lied, panic spread everywhere. Today, confidence hangs by a thread. And here's the bizarre twist. Even though the warning signs are everywhere, many still cling to the same delusion. Technology will save us. AI will fix everything. The market always recovers. Sure, technology transforms economies, but it doesn't eliminate. Human greed, human mistakes, human denial. Innovation can create bubbles faster than ever. Remember .com era. Cryptomania, meme stocks. The hype engine is unstoppable until the fuel runs out. What happens after the fall? Once the illusion breaks, the chain reaction will look familiar. 1. Markets fall. 2. Banks tighten lending. 3. Businesses cut. Workers. 4. Consumers cut spending. 5 more companies fail. 6. Governments panic and raise taxes or cut spending. 7. Social unrest explodes. It happened in the 1930s. We saw shades of it in 2008. And we could see it again, much worse. Imagine a global recession, mass unemployment, housing market collapse. A wave of bankruptcies. Governments defaulting, stock markets wiped out, currencies losing value. Nations turning inward and angry. That's not fear-mongering. It's a historical pattern. The same pressures that once shattered the world economy are building again right now. The strange comfort of ignoring reality. There's a famous quote, "People only accept the truth when they are ready for it." In 1929, almost no one was ready. They ignored the warning signs, and because facing them was terrifying. Today is no different. We scroll through inflation memes. We gamble in markets to cope. We pretend debt doesn't exist. Because the truth is heavy. The truth requires change. But if we wait for the crash to wake us up, it will already be too late. Transition to final act. We now understand the rise, the denial, and the triggers. In the final part of this video, we go deeper into the exact ways history could repeat. How many of the same mistakes are already being made? The financial, political, and technological forces shaping the next decade. How you can protect yourself when the illusion breaks. And most importantly, could what comes next be worse than the Great Depression? We're not just learning history anymore. We're living in its sequel. Conclusion, warnings, and takeaways. We've traveled from the roaring enthusiasm of the 1920s to the shocking crash of 1929, to the silent warning signs building around us today. Now it's time to confront the question that brought us here. Are we heading toward another Great Depression? The uncomfortable truth is, the world is more leveraged, more interconnected, and more fragile now than it has ever been before. One spark, a major bank failure, a government default, a dramatic market crash, could send the global economy into a tailspin faster than at any other moment in history. But here's where our story takes a turn. Could this crisis be even worse than 1929? In the Great Depression, the economic collapse was devastating. But communication was slow, markets were smaller, and global interconnectedness was limited. Today, one crash in New York can wipe out wealth in Tokyo, Berlin, Dubai, and London within minutes. Markets are synchronized. Banks are interdependent. Supply chains connect every nation on Earth. A shock today doesn't ripple. It explodes. Technology accelerates fear. Algorithms intensify volatility. And panic spreads at the speed of Wi-Fi. In 1929, people lined up outside banks to withdraw their money. Today, millions can drain accounts simultaneously with a phone tap, before regulators can even react. The ghost of 1929 isn't just returning, it's evolving. The political storm that follows. Financial collapse. Economic pain doesn't stay economic. When people lose jobs, they lose stability, they lose trust, they lose hope. Desperation breeds anger, and anger creates movements. In the 1930s, the Great Depression fueled the rise of extremist politics, collapsing democracies, trade wars, isolationism, eventually, World War II. We're already seeing hints of that world. Divisions widening in society, countries weaponizing trade, nations blaming each other for crises, populist leaders on the rise, battles over resources, technology, and currency dominance. History is repeating the script, with different actors. The debate: doom or reset. Some experts warn a new global depression is inevitable. Others say a crash would be painful, but ultimately beneficial. They argue collapse forces change that comfort never will. Corrupt systems get reset. Wasteful spending gets purged. Economic power shifts to innovators. The old financial order gives way to a new one. Perhaps this crisis could spark a rebirth. But there's a catch. Transformation always comes with suffering. The question is not whether change will come. It's how much pain the world must endure for it. So, what can we learn? 3. Takeaways for the future. After everything we've seen, here are the lessons history demands we remember. Takeaway. Number 1. Bubbles are born from belief and die from fear. When everyone thinks they're getting rich, the danger is greatest. The crowd convinces itself, risk doesn't exist. We're smarter now. This time is different. But the bubble always pops, and it always pops suddenly. Takeaway number 2. Systems collapse slowly, then all at once. The Great Depression didn't begin with the crash. The crash was just the exposure of rot that already existed. By the time we see the headlines, it's already too late. Be alert to problems before they become crises. Takeaway number 3. Protection is personal. Governments won't save everyone. Corporations won't save workers. Markets don't guarantee recovery. You must understand where your money is, where your risk is, where your future is. Financial literacy isn't optional anymore. It's survival. A final warning. We stand at a turning point. Just like the last time the world danced on the edge of prosperity and collapse. Unchecked speculation, extreme inequality, debt at a breaking point, fragile banks, political instability, denial from the top. The same signs that preceded the Great Depression are here, right now. The ghost of 1929 isn't a myth, it's a mirror, and the reflection is getting clearer every day. But there is hope. Understanding history is power. Recognizing patterns is preparation. Asking questions is the first step to avoiding disaster. By being aware of the risks, you can invest smarter. You can protect your future. You can navigate through uncertainty, because even in the darkest economic times, those who know the rules write the next chapter. Final call to action. If you want to stay informed, if you want to understand where the world is headed, and if you don't want to be blindsided by the next collapse, then make sure you subscribe to this channel, The Financial Historian, where we uncover the truth behind money, power, and the hidden forces shaping our future. Like this video if it opened your eyes. Share it with someone who needs to hear this, and drop a comment below. Do you think a new Great Depression is coming? Or will we avoid history's biggest mistake? The discussion starts now, and the future depends on it.